Thank you so much for joining us today, everyone, and welcome to the fantastic webinar session with three really great panelists whom we'll shortly introduce you to. This webinar is hosted by the Asia Pacific Financial Wellness Initiative, a tiny group of volunteers who are absolutely passionate about promoting financial wellness across the Asia Pacific region. It's also really great that we're doing this on International Youth Day, because did you know that 60% of the world's youth live in the Asia Pacific region? So this is really a young and growing dynamic population, and we really want to do everything we can to make sure that the 750 million young people between the ages of 15 and 24 in this region are able to use their money wisely. So without further ado, I'd like to hand over to Anna. But before we do that, I recognize that I'm coming to you today from the lands of the Wurundjeri people of the Kulin Nation, and I'd like to pay my respects to their elders, past, present, and emerging. So over to you, Anna, for a fantastic session.
Thanks, Vinita. And hi, everyone. Thanks for joining this session today. My name is Anna Perera-Shaw, and I work for RFI Global, which is a global market research company that specializes in financial services. And I'm really excited to be moderating this session today on the topic of innovation and financial education for young Australians. There's a lot of conversation about the importance of youth banking, youth education, financial literacy, financial well-being and resilience. And I think that the youth really will be, all young people, young Australians will really be the new generation of homeowners and people using different products and engaging with different services. So it's a really great topic for today. And just to warm us up, I've got some data that I'd like to share from a recent youth banking study that RFI Global has done, which showed that Australians aged 16 to 21 are more likely to indicate a high level of understanding on products such as savings accounts and buy now, pay later services, interestingly, compared to something like credit cards and mortgages. So there's a new level of understanding about the types of products that customers are engaging with, and we are seeing different understanding and different aspirations to take out different products compared to what we were seeing 5, 10, 15 years ago, where there was that more traditional product life stage and consideration of different products, such as when you turn 18, you're taking out a credit card. And something else we saw in the data was that young Australians are more likely to agree that they trust banks to keep their money safe, but they're less likely to agree that banks are interested in them as individuals or see them as a valuable customer. So I think our panelists today actually have a really great perspective on making products a little bit more tailored to particular demographics and actually thinking about, how do you make customers feel that a product is relevant for them, and how do you design products that are relevant to the needs of particular groups? So enough from me. I'll hand over to my panelists to introduce themselves and give a bit more detail about their organizations. But as a very high level introduction, with me today is Yish Koh of Kit, Emily Heath from EY, and Ben Ford from Frollo. So I might start with you, Yish, if you could introduce yourself, tell us a little bit more about your role and Kit, and also just what you love about your role and the organisation and the impact that your organisation makes.
Thanks so much for having me, Anna. I'm Yish Koh. I'm the Managing Director of Kit, and we're part of X15 Ventures, which is the venture scaling arm of the Commonwealth Bank of Australia. Kit is an earning and learning money app for kids. So with Kit, kids can earn money, pocket money on their payday by completing tasks. They can save money in savings stacks, and they can also spend money with a prepaid card. And it's all brought together with Kit, who's a little character that you can see behind me, who delivers bite-sized education that's just in time as kids are using the app and is relevant to them. So I guess what I love about my job, that it's really fun working in a product with kids. So we get to interact with a lot of kids and get to listen to their ideas and make those ideas come to life. So we can have fun with it.
Sounds great. And it's always nice when you hear people talking about roles in financial services that they find fun and engaging and innovative. And I think Kit is really operating in quite a unique space. And I can imagine the conversations you're having with kids about their ideas. I'm sure there's a lot of fun that happens in those meetings.
Absolutely.
Emily, did you want to go next?
Yeah, absolutely. So first, I'd just like to say massive thank you for having me in this discussion. I'm really excited to hear from all the panelists, and also just acknowledge that I'm coming I'm today on digital land, so that's where I'm presenting from. I'm a director at EY in a team called the Community Impact Team, and I do just need to add that the views that I express today are not necessarily the views of EY. Our team's role is to design, develop, and deliver programs that are designed to create social good and positive behaviours in young people. We have a really strong focus on building the financial capability of young people and have worked on programs all around the world. I also have a background in behavioural neuroscience and have done a lot of research in the financial capability space. So I like to think that my role sort of spans that intersection between theory and practice. So taking all the research and applying that into an actual real world context. The thing I love about my role is that I get to wake up every day and go and do work that's designed to make a positive impact in people's lives. And I get to surround myself with people like yourselves who are all equally passionate about that as well.
Absolutely. And Ben, do you want to follow up as well?
Sure, yeah, thanks for having me, Anna. It's been great to meet everyone else on the panel. Looking forward to the discussion immensely. My name's Ben Ford. I'm head of growth at a fintech organisation called Frollo. Frollo is a business that has a money management, or PFM, personal financial management app that's available for free to consumers to help them feel better about money, manage their finances, see all of their finances on a single dashboard, and ultimately make better financial decisions. As well as that, we also sell our services to financial institutions, banks who may not have the inclination of the sophistication, the time to develop these services themselves. So sometimes they'll choose to buy it in from us rather than build it themselves. And that enables us to actually help more people change their financial lives through the scope of these organizations.
Great. So I think we've got quite a good mix of perspectives and backgrounds here from the education and the innovation side, behavioral science and financial wellness as well. And it's always great being in these discussions where everyone is just so excited about financial wellness and just really thinking about how we can make a difference, what the market looks like, and how we can, really have these conversations to drive impact. So really glad to have you all here with me, and I might just jump straight into our discussion because there's so many questions that we could ask, but I've tried to stick to some ones that are really tying in with that focus of youth and that new generation of customers that will be growing, particularly over the next 10 and 20 years. So to start off with, I wanted to ask a question around the current level of financial literacy in Australia, particularly thinking about our young people today compared to what we would have seen 10 or 20 years ago. And I think the role of digital does play a part, or the role of internet access, thinking about how customers can get information compared to in the past where perhaps it more traditionally came from parents or guardians or other people in the family. But that topic of current levels of financial literacy, how would you currently rate it? Maybe Emily, I might start with you on that one.
Yeah, thanks, Anna. So we do have a measure of financial capability in young people because PISA run large scale assessments of youth financial capability pretty regularly and publish the results. And from those assessments, we see that Australian young people perform above average compared to other OECD countries. So from that single measure, you would say we've got a high level of financial capability. But what I would say is there are a couple of challenges that I think young people face today in the financial capability space that they haven't and previous generations haven't had to face in the past. The first is that, as you mentioned, money is increasingly digital, and that also means that money is increasingly invisible. And so it can be really hard when people learn about money by watching their parents or watching other people engage in financial behaviors. When those financial behaviors become invisible, it gets much harder for people to learn and for parents to find those teachable moments for young people. The second thing that I think is changing in the financial landscape is that financial products and services are just far more complicated. We know that there's so many different types of products that are available. There are more and more terms and conditions that the financial space is just far more complex. And that requires additional skills and new skills in order to navigate it successfully. And so skills that often aren't considered financial capability skills, like the ability to have conversations about money, to ask questions, to advocate for yourself, I think those things are becoming more and more important to help young people navigate this more complex financial landscape.
Yeah, the point about money being more invisible is a really good one, comparing, when you used to put money in a piggy bank and physically see that I'm building my money and I can physically see the coins piling up, compared to money becoming more and more hard to really relate to as something that is tangible is really interesting, and something that I wonder if we would have predicted 20 years ago when, it was just a different landscape. Yish, did you want to add any comments there?
I think Ellie's done really well. I think I'd add one more thing that is a challenge when it comes to young people financial capability, which is the rise of online gaming. So with money now becoming digital, and online games have also got their own forms of in-game currency, the ability for children to distinguish between what's a game versus what's real. And, we did a survey of parents and found that I think it was 37% of parents have had their kids, almost half, use their credit card when they didn't know, because it's very easy when your credit card is linked to your account, like a Google or an Apple account, and the kids are just clicking buy and they're not actually realizing that real money is being spent on that.
I've definitely heard a lot of stories about people having their kids rack up $500, $800 on their credit card because it's linked to iTunes or similar, which you can just see how easy it is to do. But, how would a kid understand that that's a lot of money for something that probably, almost definitely isn't worth that level of money?
Yeah, and I think in a world where marketing is incredibly personalized and very targeted, kids are more vulnerable than adults when it comes to those kinds of enticements that you might see in games, such as, these skins that you want 50% off only for the next 24 hours, and the level of sophistication you need to be able to identify that's a marketing tactic and they're trying to get you to spend more money. It's a real challenge.
Yeah, and then it puts pressure on the parents because the kids are saying, I've only got 24 hours to save this, save money on this concept of, it's probably not even a great saving. Interesting. And Ben, was there anything to add there?
Oh, look, I think that's a good summary. I think it sort of largely boils down to this sort of instant gratification, and that can be that manifests itself in a number of different ways, whether it's games, whether it's lack of ability to seeing savings stack up, whether it's in a piggy bank or a bank book and things like that. To Yish's point, anyone who's had a child have a meltdown because they can't buy a particular in-game purchase or a particular pair of trainers on in the store in their size, and that ruins an entire shopping trip for the rest of an afternoon, will attest to the fact that these are quite powerful levers. And whilst there's some benefits to the children being more sophisticated, whether it's through pocket money type apps and learning about finance in a holistic way, the visibility and the access to these kind of quick wins, if you like, is also a real risk that needs mitigating. I think it's a blessing and a curse, and I don't know if that translates into more or less literacy. There's definitely more awareness, but also more hidden risks, I would say, built into that.
Yeah, it's a good point with there being, it's not necessarily all negative, but also it's just a new landscape with new challenges. And I'm sure that in the future, there'll be new challenges as well that we haven't anticipated, and things that come up that we'll need to adapt to. And I suppose if we think about financial literacy, and if we focus on financial literacy in helping young people, so kids and then teenagers and young adults, making educated decisions or considered decisions when it comes to taking out banking products, and then use of services, even use of services and products such as buy now, pay later. It's a new way to pay. It's a different concept of buy now and pay it off later, compared to save for something and then buy the purchase after you've saved. What do you think financial literacy can really do to support this kind of decision making? Emily, you mentioned your work in this space. Do you have some insights on that one?
Yeah, I think it's a complex question, because financial literacy or financial capability is a complex beast, and there's actually a whole lot of different domains that represent different levers that can be pulled to help young people understand better and make better decisions. One of the things that I think can be really, really valuable is helping people build self-awareness, not just of the reasons that they're buying things, but also some of the limitations that as human beings we just consistently face. And Ben mentioned that instant gratification and the loss of self-control. That's a really common thing that all of us have. We all have a pool of self-control that gets depleted over time, and it makes it really hard for us to regulate our behavior. And so helping young people to understand that this is like a muscle that gets tired, and also to recognize and understand that we're in an environment now where you used to be sold to at really specific times, and now we're in an environment where you can spend money at any time of the day or night, from your bedroom or your home computer. And so helping young people to develop that self-awareness and develop strategies that really practically work to help them manage their self-control is critical. I think the second thing, and this is also around the use of good products, is giving people, one of the analogies I like to use is when we try to tell people how to be healthy, we don't expect that they are able to perform surgery on themselves. We tell them really simple, easy behaviors that they should engage in to make them more healthy. But we also tell them, if you're in doubt, go to a doctor, get help, get support, get advice. And I think the same needs to be true of young people when they're making financial decisions. We give them simple, practical behaviors they can engage in that will help improve their financial outcomes. But we also tell them the financial world is really complex, and that's okay. And so you need to go get help, get support, get advice, and then be able to assess the quality of advice that they're getting. So talking to banks, bank managers, or people who are helping to buy the financial products, understanding what other incentives might lie for the person who's selling to them about those products. So helping them to become discerning, critical consumers of financial products, I think, is really.
You made a good point about the fact that we're always being sold to. It's not you walk into a supermarket or you walk into a retail store and then you're having someone say you've got to buy this now because of this. It's constantly, anytime you're looking something up, there's an opportunity to buy it right now because you'll miss out. There's 5 people looking at this item, so you have to get it immediately. But I really like that analogy as well of, you don't have to be an expert, and even if you don't fully understand something, you can engage with some tools, but also there's advice out there, and even assessing the advice they receive is also really important. Being skeptical or being critical of the advice, kind of like getting a second opinion when you go to a different doctor, because the first doctor you think, I'm not sure about that advice specifically. And I think it's a really good point around instilling some of those behaviors. I guess particularly as well, not everyone has role models in the household that are comfortable talking about money, and money is a very cultural thing as well. Vinita and I have had conversations about that. We could probably derail this whole session and spend an hour talking about that, but that's some really interesting points there. And I suppose, Yish, from your perspective, operating in this quite targeted space, what do you think about kind of financial literacy, helping young people make decisions and understand this process of having money and considering different products as well?
Yeah, so I think what's really important, particularly for the younger audience that we're targeting, is it's about both the parents as well as the children. I think Emily talked about, the financial socialization and parents being able to have good conversations with their children. So I think there's a really important role that apps like Kit have to play in terms of, firstly, making that invisible money more visible and making it appealing and engaging. So for example, in our app, we've got customization and stickers, which are just at the start of and we'll continue to work on, but to really make the kids feel like this is something they're entering the real world, this is their own money, and it's something that they want to be checking or keeping in touch with, which is where the name Kit came from. And then secondly, where we would eventually like to get to is that, parents are a really time poor audience. So, in the past, when CBA's done financial education, they've surveyed parents and they've said, well, if we created lots of materials, would you sit down and do these with your kids? And they'll all say, yes, they actually do them. And then they find that, parents are too busy and it never reaches the top of the priority list. So how can we actually chunk it down into bite-sized, relevant sort of pieces of advice for parents, so that when certain things happen in the app, that means, okay, maybe this kind of conversation around spending, the child's tried to spend over, more than what they have in the account, for example. What does that mean in terms of a conversation then? And so it's not just about, the use of the tool itself, but it's about how we promote those healthy conversations between parents as well as children.
Yeah, absolutely. You can see why that would be, as a theory, when you test concepts like that with respondents, it's always, yes, this sounds great, yes, that sounds appealing, but when it comes down to it, it's a big ask. And I think you're right, people are so time poor that they'd love to spend a weekend going through all these documents and education tools and everything, but at the end of the day, if you can make it really digestible, then they're more likely to be able to fit it in with their routines and with their lifestyle, because I suppose everyone's got the best intention, but it doesn't always mean they have the time, especially when they're juggling all these other things. And then, Ben, I was thinking on the topic of products and taking out products with the kind of open banking landscape where customers don't necessarily need to be as tied to specific institutions. Do you think that financial literacy will be kind of a particularly important consideration when customers are thinking about, you know, being more multi-banked and having different products and having the opportunity to actually really select banks based on what they offer versus the bank just being a standalone institution that they've always been with?
That's the plan. Absolutely right. So I mean, I think we'll sort of potentially could go down into a bit of a rabbit hole with this, but you know, if you think about the lazy tax, as it's sometimes called, which is probably a bit of a lazy term, it's more sort of the inertia cost. And that is basically people sticking with a particular financial institution because it's too difficult, too time consuming, there's too much admin involved to migrate away from them. I think that per the last study, I think that was somewhere in the region, or that's costing Australians $11.6 billion per year. Now, you know, break that down by the number of households. I don't know what that works out at, but it's not an insignificant cost by any stretch on a per individual or a per household basis. And I think from memory, I think the majority or a lot of people were inclined to do the research or do the work to potentially look at changing products. But actually, when it came to going through the process, it was just so laborious to actually get into the weeds and actually go through product disclosure documents, move superannuation around, close down bank accounts and things like that, that not that many people actually did it. So one of the premises behind open banking is that consumers will be able to much more freely share their data with other parties, move accounts, switch providers to more efficient providers, and basically end up paying less of that lazy tax. And yeah, I mean, that should promote competition and should be better for all, particularly in terms of sort of literacy and wellness. So I think it sort of suggests that the inclination is there. People know that they're often overpaying, but it's just so hard to actually make the switch and make the move. You've got to be pretty determined, pretty committed, and the savings got to be pretty significant for you to, you know, completely follow through and actually make the move, which is a shame. And hopefully that will change with you know, things like open banking, making that more accessible.
Yeah, it's such a great point, especially with, I think all of us working in financial services kind of assume sometimes that everyone is just as engaged as we are. But in reality, the average consumer probably isn't, you know, getting really excited about stats and thinking about all the different products out there and really, you know, thinking about incremental differences. Most people, as we've spoken about, are very time poor, and it's quite overwhelming to sit and think about your finances, you know, and actually make a decision and work out which one is actually the most relevant and appropriate for their situation when they all kind of look the same. You know, even when you look close, it takes a lot of time to really understand how those products differ. So I think there's definitely a lot of opportunity there that's quite exciting.
Yeah, and I think that there's probably a role here for regulation to play when it comes to that sort of boundary of what is sort of general and financial advice, because, you know, when you look at an app like Kit, for example, we can't necessarily make financial advice to a kid to say, you know, this is the approximate percentage you should be saving or spending, because that is very much an individual thing that would require license around advice. But I do think that if it was the regulation could evolve so that, you know, things that we know will nudge kids or young people towards positive financial behavior could be treated slightly differently. From that perspective, we might be able to more easily influence those decisions. And that might, for Ben, for example, where you're saying, you know, oh, if the main thing that you're interested in is a certain rate, could you actually automate some of this if there was a regulatory way that you could make that simple without needing to, you know, have a statement of bias or all those kinds of things.
And there's some really interesting research actually from CommBank around even providing simple information about trade-offs. So if you show people different credit card products and just show what the different trade-offs are, that alone can really help people to make decisions that are in their best financial interest and select products that are most suitable for them. So it doesn't need to always be even a huge undertaking, but even just tweaks to how product information is provided can have a huge impact on the way people make decisions and then use products into the future.
I'd just add to that, that's a great point, and that's some of the product reference data that's actually being made and being mandated to be made available via the consumer data right or open banking. We're playing around with some of that in the Frollo app in sort of beta testing at the moment, comparing the interest you've paid on your credit card over the last 6 months and really sort of giving people that sort of slug between the eyes and saying, look, you know, you spent $1,000 on interest and fees on your credit card. A much cheaper deal would have been potentially this one, and the same can be done with your savings account and things things like that. And it really sort of starts to become quite sort of meaningful and marked when, even in a low rent, or until recently in a very low interest rate environment, you would have sort of earned $300 or $400 more interest in the previous 6 months. That's going to be quite compelling for most people. And it's actually sort of moving it from money management sort of 1.0 or 2.0 to 3.0 and providing meaningful, actionable insights. And that's what I think will sort of really start to facilitate meaningful change in big numbers.
And that really highlights the importance of making, almost, I guess we've spoken about the invisibility of data and or of money, and actually making it really clear that I know it looks like these two products are the same, but actually if you move to this one, this is how much you could save, or in staying with this product, this is what it costs you, or have you considered the fees you're paying here versus here? And I really like that point about trade-offs, because I know there's been research around if you pay off 3% of your credit card versus 5%, it's actually quite a difference in terms of the time it'll take you to pay off the debt. But naturally consumers won't always know that until you actually say, here is a graph that shows you 3 years, here is it shows you 5 years, and this is how you could get to A or B. And I think it's a good point around how do you make customers understand their situation, but how do you also give them the information to make it really easy for them so they don't have to really spend a lot of time trying to figure this out and make sense of it, which does tie with my next question when thinking about financial education and financial education programs. I know there's been different approaches over the years, and we're increasingly becoming a more digital, consumers are becoming more digital in how they bank and how they research, and even how they apply for products, how they ask questions of their banks. And for young people specifically, I'd be interested to get some thoughts on what an effective financial education program for young people specifically needs to be successful, or what strategies there are to actually encourage young people to engage beyond just turning up, actually engaging with the content. So Emily, I might start that one with you, given I know this is a space you've done a lot in.
Yeah, thanks so much, Anna. And I will say I could talk about this for ages, so I'm going to try and keep it very succinct. I think the number one thing that financial education programs for young people can do, or should be doing, is recognizing that knowledge isn't enough. So many financial education programs I see that are out there are just about providing people with more and more and more information. And I think you mentioned at the very beginning of this talk, young people have Google, young people have the internet. We're not making decisions in an absence of information. We're often actually making financial decisions in a case where we're just overloaded with huge amounts of complexity and information. And research has shown that knowledge accounts for just 1.1% of the variance in people's financial behavior. So whenever I look at financial education programs that are just about information provision, I like to say it's almost like trying to change the direction a car is going by leaning in your seat. You're not actually making an impact on the things that are truly driving people's behavior. So that would be the first thing I would say. The second, and I think this is Yish and Ben have made this point as well, is that in addition to building knowledge and understanding, I think we really need to build young people's self-efficacy. So the belief that they can make an impact on their financial outcomes. And a really big part of that, there's a whole bunch of different things that we sometimes see young people don't always get that opportunity now with money. So one is vicarious learning. So seeing other people engage in positive financial behaviors, and we've talked about how invisible money can make that harder. The second thing is giving them opportunities for mastery experiences, and often that integration with education and product can be that opportunity to give people those mastery experiences. And third is state management, so helping people to manage anxiety or fear or concern around their financial decisions. And Ben, I love the examples that you gave there about giving people really simple, actionable things they can do that makes making better financial decisions seem really easy and really achievable, and people feel like they know what to do. So I think that's also really critical. So knowledge isn't enough, and try to build self-efficacy. I had jotted down about 6 other things I'm thinking could be good things, but I'm conscious that I imagine Yish and Ben have a lot to say as well.
Yeah, I like your point about leaning in a car. I think that's a really it's a good example of just beyond. But I think I know I've had conversations before around financial literacy is one thing, but financial resilience is that extra level of you'll understand your financial position, but does that encourage your behavior, or does it influence your behavior maybe not, particularly when it's, money is stressful, it is anxiety inducing. People have baggage around money because of role models and family and culture, and it's, it's never going to be something that's really straightforward, and it's not going to be something necessarily that people feel joy when they look at their bank account. Most of the time it's not always that enjoyable. So maybe, Yish, if I hand over to you to maybe add some comments here when thinking about, you're trying to make finances a little bit more fun for a young customer, and you're thinking about ways to engage kids with money and make it be a bit more real. Did you have any thoughts on, financial education and how you can really engage this new generation or engage these young people in this type of initiatives?
Yeah, and I think, this is a really good example of where trying to create a more personalized experience for the child becomes important in engaging them. So Emily and I actually, I think it was last week, were talking about how you can increase engagement when you create a personal connection. So that's why we've created a little character, because the vision is that they will create a personal connection with the child to make them feel more engaged. And Kit's tone of voice is very much encouraging. And we talk about positive money mindsets as well, around, money is just a tool to get what you want. Money isn't everything in the world. And so trying to encourage kids to have that positive mindset is really important for us, and to never be, critical or shaming, regardless of what is happening for the child at that point in time.
Yeah, I can see how that would be useful in just setting that tone that money can be, it just gets you where you need to go, but we're not saying that you need to have money to be successful. It's kind of using money as a tool rather than saying that if you don't have this, you're in trouble. It's kind of, here's what money can enable, here's how we can help you get there, which I think is I'm sure there's been a lot of work behind the scenes to really target that message to make sure it's, really appropriate for kids, and is something that can really build that longer term attitude as well.
And I think the other side of it also is that we want Kit to be able to prompt the kids almost to ask their parents. When we've done research, I think 48% of parents said that they actively avoid talking to their kids about money. And I do think that the taboo is because probably several reasons. One is that parents don't think it's appropriate for kids, like they don't want their kids to worry about money, or maybe money might be tight in the household. But in all situations, there are ways to talk about money where you don't need to go into the specifics of stressing out your kid about your specific financial situation, but you can talk about things like when you're in the supermarket, why you're choosing the certain thing, because choosing something that's bigger because over the long term that's cheaper. That's the kind of conversations that we hope through Kit and Engaging Kids we can hope to slowly break down that taboo with parents as well.
I think encouraging positive dialogue is also positive, because I think if you have the avoidance doesn't necessarily help, even though it's coming from a good place. And, you're right, if you can make it more about, this is why we're buying this because it's better value this way, or, this is why we're not buying this because it actually doesn't help the household budget for this week, so that kids can sort of, keep thinking of money as more than just a number that enables them to get what they want. It's actually, here's how money impacts the family or the decisions that we're making. And, anything that encourages those kinds of particular dialogue that has a good intention, I think is really positive.
I'll give you a really good example of that. So one of my colleagues, we actually interviewed her 9-year-old son, and we asked the son, what are your parents' attitudes towards money? And he used this, we're on videos, I can show you, but he used this, my parents just spend like this. And she was horrified because she said, we just went to the Easter show, we had a budget and we set it, and we said, you can have this and this, but they never actually told their son that they had a budget, which is where he got the impression that I wanted something, I got whatever I wanted. And that moment actually made them realize that, when we do these things, we actually need to explain to our kids why we set the budget and what that was for.
Yeah, it's kind of when, kids either they grow up thinking their parents are really well off because of the way the parents provided or get, really prioritized, and they didn't necessarily notice that, maybe one of their parents wasn't really eating as much, or maybe they were making sacrifices elsewhere, or, kids thinking they grew up without much money, but it was actually just the way the parents were conservative. It's interesting that thinking about the way a child views it, whereas the parents are probably just thinking, we had a day where we got our kid what we wanted to, and it was within our budget, but they saw it as a day where they got everything they wanted. Therefore, their parents were being a bit loose with money, which is quite sweet, but also you can see why it's quite confronting for the parent. That's a great example. I guess on the topic of financial education as well, there's the other side, which is the challenges that exist in delivering these types of programs. Emily, was there any comments you have about like barriers or challenges to educating young people, particularly children?
Yeah, I think one of the big challenges with traditional education, so that is education where you go and run a class or something, is actually just access, because we know that people tend not to opt in to financial education programs. People often hear that and think it's really boring. We also know there's some really interesting research that looked into the fact that even people who were in large amounts of financial need didn't want to take up financial education programs. But when you actually look at the outcomes that they drive, a lot of times that's because they're not very effective and they don't actually help people that much. So getting young people to opt in to financial education programs, to understand that they're valuable, that they're worthwhile, I think is really critical. But then there's also this sort of less traditional version of what you think of as financial education, when you integrate it into products or you give some of that more just-in-time thing. And I think the two things, and I think Yish alluded to this, one is letting young people bring themselves into that educational space so they can say what's relevant to them, what's meaningful to them. We know that money has really different meanings for different people, and people have really different values and approaches, and they're not right and they're not wrong, they're just different. And so giving people that space to make it relevant for themselves, I think is really critical. And then the third is using data effectively. I think we're in a world where we've got so much effective data that can give people insight into their behavior, but we're not always the most effective at using that data in a way that isn't overwhelming, and that truly gives people actionable insights into what they could do, which I know Ben mentioned as well.
Yeah, definitely. And it's a good point about actually getting people to choose to be, even if it seems that they are the target group for financial education, it doesn't mean that they want to spend Friday night or Tuesday morning or whatever the time commitment is learning about this, particularly as, I think, as I mentioned about, we all love financial services, but the average consumer doesn't necessarily feel excited by the concept of financial education. And, encouraging people to actively engage with these types of initiatives, I can imagine, does have challenges, even when in theory the program is, perfect or really ideal and targeted and interesting. Yish, have you faced any challenges with these types of programs, or is there anything that you think is difficult in delivering these types of programs for that younger customer or younger person?
Yeah, I do think it comes down to parents' willingness and kind of the changing landscape when it comes to financial products. So, typically in this sort of cashless world, kids will be using cash up until the time maybe they went to high school or even older before they got a card. And so when we've interviewed parents about, using a digital solution, and when the parents realize that there's a card involved, there is still that kind of nervousness around, oh, I don't want my kid to have a card because maybe they'll spend a lot. And, in kid, we've got spend limits and controls to put around it, but there's still that mindset that parents have that probably needs a little bit of shifting, that actually, because the world is going cashless, it probably means that kids will have access to cards when they're younger, but it just means that there needs to be more control for the parents so they can feel that, their child isn't going to be going and spending all their money on something that they don't want them to spend that money on. And I think the other challenge is, I think we mentioned about how time poor parents are. So, getting them to prioritize something like this, particularly the educational aspects, is something that will be an ongoing challenge. So the way for us, we want to really measure and prove the impact that we've got on financial capability, so we can actually go out to parents and say, this app is actually going to make your kids better at finances, and it will also make your life easier.
That reminds me of some research that we did in the youth banking study. We asked parents, what level of controls would you want your child to have on a banking product, or, what level of involvement or control would you like? And there was, the data really showed that parents were happy for, if they were comfortable with the digital kind of concept, they were happy for the kid to be able to view their balance and view their transactions. But when it comes to things like being able to buy online or, being able to withdraw cash, there were some limitations there with how much functionality they were comfortable with. And even you mentioned, comfort with a child having their own card rather than having, maybe a cash allowance. There was definitely the perspective that it was high school that was a bit more comfortable for a child to, or a teenager, to have their own money. And there was, some life stage elements there, such as, when they get their first job, that's kind of where the independence is maybe a bit more comfortable for everyone, rather than when that's just how they have money, they have their own card, they're really independent. It's just, I suppose there's that adaptation to the increasingly cashless environment, but I can see there's that comfort barrier, because I mean, even a young parent would still, they've grown up in a very different landscape to the kids right now, and it's changed so rapidly. So I can really see how that barrier could be one to, be quite challenging to overcome and really build comfort with. And so we have spoken about digital. So I might focus this question or start this question to you, Ben, because I was interested to know how thinking about digital offerings, particularly really streamlined and engaging and well-made digital offerings such as mobile apps, can help to engage young people with their own finances, and whether this can have a longer term impact in the financial literacy space. Because if you've got a really great app that tells you how much you owe or how much you have saved, how does that enable you to make decisions later on in a more informed way? Did you have any thoughts on the role of digital there and the role of apps? I know Frollo has an app as well.
Yeah, absolutely. And I was sort of dovetailing onto the last question, so I sort of had an answer ready to go for that one, but it was sort of seg into this one pretty neatly. And I think you're absolutely right. What I was going to say was the competition now, given that everyone is sort of moving towards a digital world, and we'll park sort of a more analog type of financial literacy preached by people like the Barefoot Investor and sort of move into the digital world. But if you look at the apps that have sort of really succeeded, if not necessarily from a youth perspective, but from a millennial perspective, that they've really sort of been very much sort of design centric. And I know from spending time with Yish at Kit, there's a real sort of movement towards that as well. The UX and the UI, so the user experience, is really sort of very engaging, very bright, and you've sort of almost got to sort of have this gamification within the app to coach people and encourage them to make better decisions, and really just sort of create increased dwell time on the app. So you're wanting people to stay engaged in your app for as long as possible. And Upbank, I would say, is the one that's really sort of nailed this, and they've really led with a very, very design first approach. And I would say the support amongst their customer base and the loyalty is probably greater than any of the new banks that have come online, and also any of the existing banks. So absolutely, that sort of digital app experience is absolutely critical. We find within the Frollo app, it's all very well providing people sort of budgeting tips, budgeting tools, but the thing that really drives the engagement within our app is the insights and the messages that we present to people when they open up the app. So we tell them, you've been spending a bit more here this month. Have you been spending more there? Perhaps you could do with saving a bit more here. All not financial advice, but prompts based on what the data that we're seeing from them. And again, it's almost like the glue that pulls all of the other features together and creates longer term engagement and gets people coming back to the app. So I would say, in this day and age, that's absolutely critical to get that piece right.
Yeah, absolutely. And those specific targeted nudges or notifications I can see would be really valuable, because we don't always realize what we're spending, especially given it is cashless. If it's digital, you're kind of just tapping your card, and it can be a little bit harder to sometimes fully understand how much you're spending. So if there's kind of a quite intelligent notification or something that's saying that you've actually spent more on groceries than you normally do, you spent more in this category, I can see how it would give customers, even if it's that initial like, oh no, it's kind of, okay, well, at least now I know I can think about maybe adjusting that behavior. Do you have data on, are you able to see if customers do make a change, or is it kind of hard to see that message having a tangible impact on spend?
It probably does. I mean, what we find, first of all, though, is when people start engaging with their finances, just the marked difference overall in terms of savings. I think within 6 months of using the app, the average user reduces their credit card debt by $460. So we have access to the accounts that they've linked within the app. I think within 3 months, on average, savings goes up by somewhere in the region of $1,000 or $1,200. And then we can see the impact that savings goals. And I think during the course of the app, we've seen maybe $150 million in savings goals. So again, it just sort of talks to the point that giving people visibility, encouraging people to take their head in the sand if they're struggling with their finances, but just sort of take a bit of ownership. And like you say, being sort of, or having things highlighted where your spending could be sort of sneaking up incrementally and you wouldn't necessarily ordinarily know, can be really quite powerful in terms of changing behavior.
Yeah, absolutely. And Yish, have you seen, do you have comments on the role of digital, particularly given you've got such a targeted digital offering?
Oh, sorry, the role of digital in?
Just in kind of that targeted digital offering and helping customers understand their own finances. And I suppose the unique position that kind of has in encouraging encouraging that engagement with finances?
Yeah, I think firstly, because we are sort of a younger cohort, the way that we designed it, we really need to design for comprehension. So unlike an adults app where you can, for example, show a little wheel that's turning around, we worked with an advisory panel who really understand how kids think. So things like having a savings goal depicted as a bucket where liquid is going up, it actually makes it easier for kids to understand how close they are to their goal. And the same with sort of being able to show trade-offs between what's in savings versus what's in spending, and that the total of that is how much money they have. And then the second piece is just around the just-in-time relevant sort of education pieces in a way that's fun and tailored to where the kid is at. Where we eventually want to get to is to actually learn from how the kids are engaging in the app, because age is a pretty poor predictor of how financially capable a child is. You might have a really great, an 8-year-old who reads really well and can understand a lot, and then you have a 13-year-old who isn't as capable. So you actually need to figure out for the individual, based on their behavior, what do we think in terms of their sort of money persona, and what does that then mean in terms of what gets surfaced next. So lots of work to be done, but pretty exciting about how you can start to apply things like AI to then think about what are the stories or nudges that we can present to customers to then be able to measure the impact on, just like Ben was saying, the proportion of people who've got a savings goal, or proportion of people who are completing their savings goals.
That actually got me thinking, I don't know if this is a question that has a straightforward answer, but Emily, do you think financial capability, to what extent do you think that's influenced by parents and the environment a child is in compared to their innate nature or their personality? Because I know that, growing up, I remember I sort of was quite good at saving money, whereas my brother, he had things he wanted to buy, so he would buy things, but doesn't mean I'm better at managing money than he are. We're just very different personalities. And I'd love to hear your thoughts on that.
Yeah, I think both are really important. And often when we talk about a financial decision, we talk about it being the intersection of an environment that a person finds themselves in and that person, the individual that comes to that environment. And a big part of the individual that comes to that environment is that person's previous socialization with money, history with money, experience with money as well, all of which are again informed by the environment that they've grown up in or developed in. So I'd say that they're both really, really critical to think about. And often one of the things that I think is important when we talk about financial literacy is we often put so much focus on the individual without necessarily thinking about the environment that the person finds themselves in, which is almost looking again at just one side of the equation. And I think when it comes to young people, understanding the environment is really critical. And we've talked a lot about digital money and the way that digital apps can help to give people education or insight into their behavior. I think another thing that's really important in a digital environment is that in the past, we got feedback about our spending decisions instantly. You could look in your wallet and you could see how much money was left. And when we were paid in cash, even if you weren't carrying all your money with you, when you go back and look at the money in the envelopes for bills, you could see again straight away really clear feedback. I think one of the challenges with digital is not just that it's more invisible, so it's harder to get that feedback. I also think people have to be more motivated to seek out the feedback, because it's really, really easy to ignore your credit card statement or to ignore the day-to-day transactions that are going on in your account. And so finding ways to motivate people to engage with the information that's available to them is critical, let alone getting that information to them in the first place. So I think that's a really key part of the environment. And it's one of the things I think is really exciting about digital apps is that they use those elements of gamification and engagement to make it more like it was in the past, where you were getting that instant feedback and you had no choice but to engage with the information that was in front of you.
Yeah, that's a really good point. And yeah, definitely, that was definitely useful. I'm glad that was a big question, but it's a good point about, thinking about, for an adult, I suppose we do think about the individual, why are they spending so much? Why do they have so much debt? Why aren't they saving more money? Rather than, what is it that informs their decision making? Is it how money makes them feel? Is it that avoidance of looking at money? Because when they open up their credit card balance, it's pretty unpleasant to look at that, or it makes them stressed, or it makes them fight with their partner, or whatever it might be. And yeah, it's that, I guess it's naturally quite multifaceted based on so many different factors. So that was a great answer. And it also made me think, Ben, from the Frollo perspective, you've got an app that you've said with your data that you do see that customers make an effort to reduce their debt. They've saved more, there's been savings goals and aspirations as well. How do you encourage customers or individuals to use the app? Is it word of mouth, or because I'm wondering about the type of customer that naturally downloads the app compared to the people who maybe could have a lot of advantage using it, but haven't really thought to engage with that kind of app?
Look, that's a good question. I mean, it's our core business is a B2B business. So the decision was taken that we could actually achieve greater reach through other financial institutions who might already have significant customer bases running into the hundreds of thousands or the millions. Consumer apps are notoriously quite difficult, particularly money management apps, because as a general rule, the majority of the population, to your point and to your question, are somewhat apathetic oftentimes about their money and may not know that there are apps like Frollo and other apps out there. And therefore they're more likely to engage with their banking app to do transactional banking. And then if that bank then suggests to them there's tools that could help them manage their money better, provided by Frollo, but under the banking app, then that might be a better way to reach more people. So it's something that we continue to weigh up. It's probably a never say never in terms of pushing the app out to a wider audience, and probably would put a lot more, money and resource into marketing that and promoting that. But at the moment, we're going pretty well with our B2B strategy, and selling what we've got to banks who have existing large customer base, and it sort of fits in nicely with their proposition and adds value to their customer base that at the moment those customers aren't able to obtain or extract.
Yeah, that makes sense. So your core objective isn't to get consumers using the app. Those who do have an advantage, and there's also scope to make an impact through partnerships with banks customers already have relationships with, and then using the app that has the Frollo functionality.
Absolutely, and it becomes a resource question, and we're still a scale-up organisation. We're about 50 people, with more time and more resource, we'd probably put a lot more effort into the consumer app. But for the time being, it's doing a pretty good job for us, and it's completely free with no monetization in it. So it's just designed to be a tool to help people, manage their money and ultimately feel better about money.
Absolutely, and probably one of my final questions, Yish, you've mentioned the partnerships that sort of have supported Kit, and Ben, you've mentioned partnerships as well. How do you both feel that partnerships with fintechs and technology providers and major banks or financial services providers in general help to ease the burden of innovation in this space, or support growth and kind of ensure that the objectives of what you're trying to achieve can actually be achieved, or really help drive the success of these types of initiatives? Yes, did you have some thoughts on that?
In our case, we've stood up our product in partnership with Shape, which is a bank as a service platform provider. They've been instrumental in allowing us to spin up this business sort of from zero in under 10 months. And the reason why is that they already have a lot of the core functionality that's required sort of as a consumable API. So in terms of being able to set up virtual accounts, sub-accounts, doing authorization of transactions based on, merchant codes, for example, all of that kind of comes off the shelf. And I think from a Kit perspective, that means that instead of creating a team, which is then putting together all of these elements from scratch, we can actually pull together a team that's much more focused on delivering an app and the customer experience. And that's where we really want to distinguish ourselves. We can work with our platform provider, all they do is think about how to make their platform more secure, build more features onto their platform, and we benefit from that, but without necessarily having to manage all of that ourselves.
Yeah, absolutely. I can see that definitely kind of just supports the overall objective of what you're trying to do, and enables your team to be really targeted in their approach as well. Ben, did you have any thoughts on that one?
Yeah, I was just going to add. I think it's a great example, the Kit and the Shape example, and I guess ultimately that's why our banking partners work with us, for exactly the same reason. They could build it themselves, but it would be time-consuming, expensive. They might not have the expertise, and they could partner with Frollo and have something up and running in a much more condensed period of time. I think in terms of the broader picture, and I guess it sort of talks to the success of fintech in some regards, and I think of late there's been a bit of a negative sort of commentary around fintech not actually achieving very much, but I think these are examples of actually fintech achieving quite a lot. And I'd probably also point out to we mentioned Upbank, or I mentioned Upbank before, their collaboration with Adelaide and Bendigo Bank. Adelaide and Bendigo is a fine bank, but they've now invested in Up and now acquired Up, and they've got this millennial-facing super bank, if you like, or super banking app with 400,000 or 500,000 active users. Does great things in design, does great sort of things in terms of promoting a positive money message. And if you talk about sort of the ultimate, or one of the ultimate collaborations in banking in Australia, that would be a real sort of good one to point to. There's lots of others. There's lots of other good platforms that are accelerating things. I mean, you've got 10x who have partnered with Westpac to, as I understand it, rebuild their banking platform, or their business banking platform from scratch, I should say. And I think these are just early examples of a fairly sort of nascent type of collaboration or types of partnership. And over the next sort of 5 or 10 years, I think these are going to be cropping up more and more, and they're going to be commonplace throughout the financial services or financial institution ecosystem in Australia, as the banks realise that if they want to sort of catch up and maintain their customer or market share, they've got to start partnering with some pretty innovative fintechs to achieve that.
Absolutely. And it does provide scope to have, like you said, instead of building things from scratch, you can use a platform, whether it's white labeling or just getting the support from experts in this space to just start with a really strong proposition, rather than thinking from scratch, how do we build this? What do we need? And then going through that stage of testing and realizing that certain things aren't working, because you've got the ability to use tried and tested platforms and offerings that, work.
100%.
Then my final question is to finish on, thinking about the future of financial education and innovation, especially in the youth space. For each of you, what excites you about the future opportunity here? I know we've spoken about that the landscape is shifting in terms of how we pay and how we save money, and kids particularly have a different understanding of money, or there are different challenges now that we are seeing, and I think digital provides a great opportunity. But what really excites you about the future in this space, particularly when thinking about youth? Emily, maybe I'll start with you if there's any final thoughts you wanted to add to that one.
Just one. I'm trying to think of what are the most exciting things. I think one is that we do have a really empowered group of people. They are very digitally literate. They know how to go find information for themselves. So to an extent, a lot of those initial barriers that you would need to help support people are already being addressed, and people already have that capability themselves. I think the second really exciting thing is that we just have so many more touch points where we could potentially make a difference with young people. So if you think about, say, education provided through a product, in the olden days, people would go to their bank once a week to withdraw money or something like that. Now people are engaging with financial service providers daily and multiple times a day. And so if we consider each one of those touch points an opportunity to make a positive difference or a positive impact in someone's financial behavior, we actually just have so much more potential to make change than we did in the past. And we also have more ability to capture data to make that change, those touch points really, really targeted and really, really supportive. So I think there's just so much that digital is going to enable us to do to make a bigger impact in people's lives.
Absolutely agree. And it's a good point about the fact that you're engaging with your bank so much more regularly, even the fact that you can check your balance any time during the day. And I think a lot of us are checking it quite regularly, making sure there's money in this account, seeing if that one went through. And it's a very different dynamic compared to going into a branch to deposit your check from your job, or different engagements as well. Yish, any final thoughts on what excites you? Particularly given you're working in such an exciting space.
What really excites me is about creating a product that really is for young kids first and foremost, and the opportunity that presents both in terms of, I think, what Emily talked about, which is a lot of data that we have and how we can actually use that data to then have an individualized conversation with kids and prompt them and provide that bite-sized education, but also the ability that it has to really break that cycle of financial capability, because we know that parents who are more financially capable tend to have kids who are financially capable as well, because they actually spend the time to teach their kids. So having a service where you're able to through the young person, educate them, but also sort of educate the parents at the same time, I'm really excited about that opportunity.
Absolutely. I love that point that parents that are financially capable have more financially capable kids. It makes sense as a concept, but if you can actually build this new generation of kids to teenagers to adults who will ultimately, some of them will be parents at some stage, you can really build this really empowered and educated and hopefully financially resilient cohort of people, which is super exciting that you can actually be making an impact on that group as well. And Ben, any final thoughts?
Yeah, I'm excited and somewhat nervous about the immediate sort of accessibility of data that Emily sort of talked to there, and all of these touch points. It sort of makes me nervous with my own finances. So, but what I'm most excited about, I guess, is the ability of open banking type data to help us sort of chip away at this sort of lazy tax and to get more households not inadvertently spending more than they need to on sort of fairly standard services, whether it be utility bills, whether it be telco bills, whatever it may be, and get those sort of costs down. I think the ability to switch providers and switch to better deals should be something that hits a lot of households across Australia and makes a big difference.
Absolutely. And I think anything that enables customers to know, here's what I'm paying, here's what else you can pay. I know we're seeing that more and more with different providers offering those, either the nudges or even just some proactive messaging or advice around, not necessarily advice, but notification around, here's where you could be saving money, and here's some information that could be useful for you. And we know that consumers, post Royal Commission, there was that loss of trust, and anything that I think supports customers in feeling that they as an individual have their needs supported beyond just a bank having sales targets and upsell. It's actually, for me, this suits me better, even though it makes the bank less profit. I think that that's becoming increasingly attractive to customers, so that they feel that they're actually, the products they have suit them, rather than they are just a customer, another customer, another number. So I think we've got a new landscape here that is hopefully informed by a new generation of younger customers who are, a bit more engaged with their finances and have the opportunity to really learn in this space. But I can't thank you enough for all of your time. I think it's been a great discussion, and I'll hand over to Vinita to give some final thoughts. But thank you so much for such a great discussion.
Thanks, Anna.
Thanks for having us.
Likewise, Anna. I can't thank all three of you enough for sharing your experiences. And to me, someone who's worked in this space for many decades, what really excited me about the conversation today is that you have taken what the traditional research shows and really provided specific insights into that. So, for example, research has always known that knowledge is not enough about money. You also need to encourage skills and then influence behavior. So that was one of the key tenets of financial capability building for a long time. But what you've done is really drilled into how to move from knowledge to skills and then from skills to behavior. I really love that. The second thing I'd say is that, again, research has always shown that parents who are financially capable have children who are more financially capable. So the parents' capability is one of the biggest factors. And what you have done, Yish and Ben, both of you, as well as Emily with your insights, is that you've actually made it more palatable for parents to be able to have those conversations, even if they are not financially capable. So that's what I really love, that it's no longer just the domain of those parents who are lucky enough to be socialized with money themselves. You're actually making it easier for others who are time poor and may not be as financially capable before to have the same opportunity as parents who are. So again, I absolutely love that. And I love the shift that data is making, because as a researcher, my heart has always been in using information to generate practical insights, actionable insights. And all of your discussion has been about how you can use data, as well as those extra touch points, Emily, to have not just teachable moments, but also make it easier for the parents who are time poor as well to have actionable insights. So I'll wrap all this up into our documentation on this and release that soon. But thank you so much for your time and your insights. I think with every webinar, we learn a bit more. And I have really learned a lot more today than I already knew. So thanks to all three of you for doing that.